next guest also takes a safety-first approach to investing. He recommends a balanced portfolio. Here to guide you in that direction is Adam Last, creator of the Wave Strength Charting System. Adam, I know you have some ways viewers can make maximum gains, but before we get to that, could you explain a little bit about what a balanced portfolio is?
Well, the idea of a balanced portfolio is not necessarily trusting your pure instincts about the market, but making sure that you have the capacity to make money on either side of it. It's one thing to be a bull, it's another thing to be a bear, but these are almost philosophical viewpoints. The market oscillates up and down on any given day. In a bull market, there are still strong downstrokes. In a bearish market, there are still upticks. You need to be able to make money on both sides of this. And to do that, you need a sense of balance to your portfolio. You need bets that move to either side of the market. And then if you're bullish or bearish, you can bias that slightly in one direction or another. And by doing this, you pretty much can ensure that you make money on any given day.
Now, Adam, maintaining a balanced portfolio when the Dow has been rallying to new highs, is that still something you're recommending?
Oh, absolutely, absolutely. In fact, all the more so. The Dow is making some highs, but they're not necessarily guarantees that the stock market as a whole is going to go up on any given day. In fact, it's not even a guarantee that the stock market as a whole is making new highs.
So are you hesitant to call these new highs? Are they more in the vein of a minor high?
It's a question of who's getting all the love here. The Dow is definitely making a new high. There's no doubt about that. We've got record-breaking news on the Dow. Dow's up 68% in 2002. Heck, it's up 13%. Since 2002. It's up 13% since 2006. I think 4% just this October. That's great stuff. There's no denying that that's a very powerful move. But it's not necessarily a move that's being shared across the board. There's still some real doubt out there. The NASDAQ, granted, it's up 75% since 2002, but it's down more than 50% from the highs of 2000. We're seeing the same thing in the S&P 500, up 80% since the lows, but still down 53% from the highs. There are still a lot of people sitting on the sidelines that haven't quite decided whether they like this market or not. This offers a potential for growth. I mean, certainly if we're going to see the market climb to new highs, new money has to come in. But we have yet to see this money get really, truly convinced that the stock market is where they want to be.
So is this a time then to be cautious? It's sort of the same message that Todd had mentioned in his segment. Are you suggesting that, or really what we're seeing is this a great buying opportunity? For instance, last week our guest Christian DeHamer suggests we had a great, it signaled a buying opportunity. Do you share that view?
Not to trot down the middle, I don't think you need to decide that in its entirety. The trick is to properly position yourself on both sides of it. I'll give you an example. Our recent portfolio in Wave Strength Options Weekly has tried to stride both sides of it, and we've had great success doing it. We've got a series of calls, bets that the market will move in a certain direction, or really bets that specific stocks will move in a certain direction, and a series of puts. Roughly even right now, although we're probably going to bias that a little bit to the upside to favor the rising market as of this week.
So you mentioned puts and calls. Is that in essence what you mean by having a balanced portfolio, that an investor should have both of those in there, or do you have a broader a meaning for a balanced portfolio?
Oh, absolutely. No, that is exactly what I mean by a balanced portfolio. I mean, it's one thing to be philosophically in favor or against the market, but when it comes to putting the rubber on the road, you need to have all four wheels on the ground. An example, we have right now in our open portfolio, we have calls on Citigroup, puts on Citigroup, Caterpillar, Campbell's, and FedEx. We have calls on Weyerhaeuser, AIG, Target, and the Spider Home Builders Fund. And we've seen gains across the board. None of these positions have given us losses. We have maximum gains across the board on it. In fact, on two of them, we have triple-digit gains, and it's a call and a put. So here we have a rising market, and yet our biggest winners have been on both sides of it.
See, now that's incredible because you're talking about these gains that are significant. Now my question is, how do you uncover these kind of trades?
Well, it all starts with a chart. The idea behind wave strength is, and let's go back to what we were saying about people sitting on the sidelines. Wave strength is a mathematical way of tracking whether attitudes are hardening about value on the stock market or softening about value on the stock market. It's a way of mathematically tracking whether people are getting more excited or starting to get a little scared and trying to get in ahead of them, just a touch ahead of these swells of people as they come and go in and out of the market. It starts with a chart. When we see a strong chart, be it a chart to buy or a chart to sell, we start to investigate the stock and unbury what's driving it. Drive it all down to a simple 3 or 4 pages on that particular stock, charts, value, the whole 9 yards, what's going on in it. Chew it down to something someone can really use, something simple and straightforward they can use.
So what is your latest recommendation?
Our latest recommendation is it's a telecom. We took a look around and we've seen some definite gains in the telecoms, but not as much as the market. The telecoms seem to be working in lockstep with the Dow, but where the Dow has picked up about 30% over the last 5 years, the telecoms over 5 years were still showing about a 10% loss. And we feel that they're ready to make a turnaround. In particular, we feel that Verizon is getting ready to make a turnaround. They've got their hands on something that really is what you call a triple threat. They are one of the 2 companies in position to deliver voice over internet, television over internet, and pure broadband internet in a single bundle. And they've got a much better system for doing it, a huge delivery system called Fios that's half again more powerful than the nearest competitors. They're getting ready to roll it out nationwide. They've already done their beta tests in small communities. They're getting ready to wire the country up with this stuff. And it's a huge opportunity for them to grow and really take on new areas of profit. So we're very excited about them. More particularly, we're very excited about them over the next 8 weeks, which look very good on their chart. And it's the 2 put together that gives us an opportunity. We think we can pick up about 73% gains on this in the next 8 weeks.
I was going to ask that very question. What gain do you think you'll see? And so 73%, is that what you say?
We think we can do 73% with a properly chosen asset, in this case a call option. It's got to have the right dating, it's got to have the right timing, right? But if it's properly done, we think a body could pick up 73% on this over the next 8 weeks.
I think that's significant gains. And I have one final question to ask you, and it's the same question I asked all my guests. Where can viewers get more information?
Well, by all means, we invite anyone to come by our website. It's wavestrength.com. We have extensive material both on what we're up to these days, also training material on how to move if you're still a regular stock guy and you want to move up to options. We've got training material on how to do that. In addition, we have, of course, the latest issue of Wave Strength Options Weekly, which gets deeper into our new Verizon pick.
Great. Thank you, Adam.
My pleasure.